Okay, welcome everyone to our Macro Hive webinar on Bitcoin. I hope everyone is enjoying my new t-shirt, Macro Hive t-shirt, which I just got the other day. If you do want one, which I'm sure you will, then just drop me a message and I'll send you a t-shirt. Just for introductions, my name is Bilal Hafeez. I'm the CEO and head of research at Macro Hive. We set up Macro Hive about 2.5 years ago to provide high quality research on all things markets related for a broader audience, retail, institutionals, and just anyone who's interested in investing markets. And one of the things we've started to focus on much more recently has been crypto markets. And it's something that I've initially approached with a lot of skepticism. But in more recent months and recent years, I've started to embrace much more actively. But importantly, a lot of the tools I've learned over the years trading financial markets, we can also apply to trading crypto markets as well. So in this webinar, rather than talking about whether crypto is real or not, I'm going to assume that people are interested in trading crypto, and we'll talk about some of the ways we can look at some of the crypto unique metrics one can use to actively trade and take views on crypto markets. We'll primarily focus on Bitcoin, but we'll also take a look at Ethereum as well. And just in terms of introductions, I also have a colleague of mine, Dalvir Mandara, on this Zoom webinar as well. He joined our team earlier this year. He's a programmer by background. He's one of our computer scientists in our team, and he's doing a lot of the work that we have in the crypto area. So he'll be talking later on in the presentation as well. Now, before we go into the nuts and bolts of the presentation, I just wanted to talk a bit about Macro Hive and how you can get access to the research and the site. If I share my screen now, hopefully you can see the presentation again, but now I'll show you the website. So if you just type in macrohive.com, you'll get to the website. And if you just scroll down below some of the background stuff, you'll see the type of research you'll have access to. You'll see, so the most recent note is an update on our Bitcoin metrics. So every week we'll be publishing an update on the metrics we use to try to forecast both Bitcoin and Ethereum. So this is the most recent piece on Bitcoin. We have another piece recently we published, which looks at some of the academic work, looking at what do people use Bitcoin for. Turns out it's not just for speculation. We have a piece here that looks at which ETFs you should invest in, climate change, energy, and so on. Here we look at bonds. And then earlier, we feature some trending articles here looking at EM, here looking at currencies, this looking at semiconductors. And many of you may know Macro Hive through our podcast series, where we have a really quite impressive array of guests. I learned a lot through these podcasts. They're long form podcasts, so we don't overproduce them. And the intention is really for me, as well as the listener, to learn as much as possible from these different analysts. One I enjoyed recently was with Anas Al-Haji, who's an energy expert. He's quite prolific on Twitter. And he talked about how there will likely be quite a lot of supply-demand imbalances in energy markets. And he's been quite bullish on oil for a while now. And he talked also about the rise of private generators that people will need to use to make sure they still have an oil supply. If you are a member, you will also get access to the full transcript of podcasts. So if you just click there, you'll see the transcript of the podcast as well. So how do you become a member? All you do is you just sign up here. You put your email address in. So for example, if you are Satoshi Nakamoto, the guy who invented Bitcoin, let's say I'm him, you go to join the Hive, you click for your free trial, first 30 days are free, then you put your name in, your email, you put your password that you want, you put your credit card in, and then boom, you become a member of Macro Hive. It's really easy to do. You can cancel anytime, so there's not really much sort of risk for becoming a member of Macro Hive. You also get access to our Slack room, which I'll quickly kind of show here. So if you're a member of MacroHive, you can talk to other members of MacroHive where you exchange views on markets as well. And this is something that's very popular amongst our members. So if you just pay your $30, $40 a month, you'll get access to all of the Slack room, all these great articles, and hopefully it'll help you become a much better investor. Now, onto Bitcoin and crypto itself. Let me just get out of this. One thing I did want to show just for context is where are we in Bitcoin right now? So I'm using Bloomberg here, and what I'm showing is the price of Bitcoin over the past year. You'll see at the moment it's trading at around $57,000 per unit. So we're coming close to the highs that we saw early in the year. So in April this year, we saw a high of around 64, almost $65,000. So, and if you look at a longer term chart, you see just how impressive the rally has been since the end of last year. We saw this big correction earlier this year, and then now we're back almost at the highs. Now, one thing I like to do when I look at crypto is I like to look at what macro markets crypto correlates with. So one I always keep an eye on is how is crypto comparing to NASDAQ, so tech stocks. So this, I'm just pulling the lines up now. So cryptos, so Bitcoin is this white line here, and then the yellow line is NASDAQ. So you see that in general, they kind of move together, but not perfectly. So for example, June, July, NASDAQ was rallying quite significantly, but Bitcoin was not rallying. It was initially weakening, and only later did it start to rally. So there's kind of a broad relationship between tech stocks and Bitcoin, but it's not perfect. What I have found, interestingly enough, more recently has been there's a fairly strong correlation between US bond yields and crypto and Bitcoin. So now, if you look at this, the yellow line here is the US 10-year yield. And you can see that late last year, up until like April or so, US bond yields are rising, as was Bitcoin. Then bond yields peaked, and they were falling up until July, and Bitcoin also fell. And then since then, bond yields have started to go higher, as have Bitcoin as well. So at least over the last 12 months, there does seem to be some kind of relationship between bond yields and Bitcoin. Now, that could be to do with concerns about inflation, so people move to Bitcoin perhaps. It could be to do with higher bond yields implying greater reflation, so people have more confidence in the system as a whole, so that in the broader economy, so people have more confidence in their finances, so they allocate more to crypto. So that's something to watch out. Now, if you look at a longer period for US bond yields and Bitcoin, the relationship is much, much weaker. So there's definitely some kind of relationship over the past year, but over time, the relationship between Bitcoin and bond yields is much, much weaker. So, it's something I like to monitor, these relationship between macro variables and Bitcoin. But like with all things in markets, these relationships tend to be unstable. So you need to constantly monitor them. Now, what I did want to talk about in this webinar was some of the Bitcoin or crypto specific metrics you can look at to help you gauge which way Bitcoin will go. So if we go to the MacroHive website, so if you remember, this is what you'll see. And we just published a few hours ago our update on our Bitcoin metrics. And in this piece, essentially, I just go through, Dalvir and myself, we go through a number of different metrics that we like to look at, internal metrics to the crypto market to work out whether Bitcoin will go up or not. And I'll just run through a number of them, and Dalvir will jump in for some of them as well to give you a flavor of how you can look at Bitcoin outside of some of the macro context that I mentioned earlier. So the first one I like to focus on is institutional demand. This, I think, has been a really big driver for Bitcoin over the past year and a half, where you basically have moved from, you know, the techno programming type people, geeks, and Silicon Valley, well, not Silicon Valley, but the decentralized obsessives buying Bitcoin to mainstream investors buying crypto, especially retail, but also increasingly institutional as well. So one I like to look at is the Grayscale fund. So there's something called the Grayscale Bitcoin Trust, which is a US-based trust that allows institutional investors to get exposure to Bitcoin. This trust only allocates money to Bitcoin. So if you're an institutional investor, like a big asset manager, and you're not allowed to hold Bitcoin, you can make an allocation to this trust. And through that exposure, you then have exposure to Bitcoin. What's interesting here is that the Bitcoin Trust should, in theory, just follow the price of Bitcoin perfectly. If it doesn't, that means that the trust is either trading at a premium, which means that there's more demand for the trust than there is for the underlying Bitcoin, or if it's trading at a discount, that means there's less demand for the trust. As a result, Bitcoin is trading higher. Now, this chart here, chart number 1, shows you the premium. And what you see here is that if you look at the first few months of this year, the Grayscale Bitcoin Trust was trading at a premium to the value of Bitcoin. And if you sort of had the chart going further back, it was actually trading at premium before that as well. This meant that people were willing to pay a higher price for investing in Grayscale than actually the price of Bitcoin itself. And to us, that reflected that there was excess demand from institutional investors. That means institutional investors were so desperate to get exposure to Bitcoin, they were willing to pay up to get exposure to Bitcoin. So this reflects excess demand for Bitcoin, which is a positive factor. Now, more recently, it's trading at a discount, which means that the trust is trading below the value of Bitcoin. So this could mean one of two things. Either institutional investors are less interested in Bitcoin, or alternatively, there are now other ways for institutional investors to get exposure to Bitcoin. And my sense is it's more the latter, because there's been this rise in ETF funds. There's a range of ETF funds that have been launched that track Bitcoin. Many of them are domiciled in places like Canada or Switzerland. And now there's talk of an ETF fund that's going to be domiciled in the US, which will allow investors to get a US-based ETF fund. But nevertheless, with the rise of these ETFs, I think institutional money can now invest in these global ETFs that have exposure to Bitcoin. And that perhaps is one of the reasons why the Grayscale Trust is trading at a discount. Now, if we look at the ETF flows on the ETF, on the ETF side, we find that during the correction, so in May, there was a big correction in Bitcoin, and you saw there were outflows from Bitcoin ETFs. Before that, there were inflows. Then over the summer months, the flows were fairly neutral. It wasn't really telling you anything. Even though Bitcoin started to rally in August, there was no real ETF flow support behind that all. But recently, this recent rally in Bitcoin has been accompanied by a surge in ETF inflows. So my sense is over the past 4 or 5 weeks, institutional players have come back into the Bitcoin market by using ETFs. And that's one of the factors that's driving up the price of Bitcoin. So on balance, my sense is institutionals are back in the Bitcoin market and they're buying Bitcoin. So this first factor, the first metric we look at is institutional demand. I'd like to focus primarily on ETFs rather than the Grayscale Trust, and that is giving us a bullish Bitcoin signal. Now, another metric I like to look at is, and this is our second one, is liquidity demand for Bitcoin. Now, there's different ways you can hold Bitcoin. If you don't care about liquidity, if you just want to hold Bitcoin and you don't necessarily want to be able to sell it very quickly, you can hold it in a private wallet. So the sort of classic, if you're worried about the end of the world, you basically hold it in a cold wallet. So you have effectively like a USB stick that has the keychain that has the key to your Bitcoin allocation, and you hold that, but it's hard for you to be able to sell that, because in order to sell that, you'll have to transfer the Bitcoin from that cold wallet onto an exchange where you would be able to get some liquidity. So if you do want liquidity, if you do want the ability to be able to buy and sell your Bitcoin, you'd have to put it onto an exchange. So there's a whole range of Bitcoin exchanges out there. So you'd move it from a custodian or your cold wallet or your private wallet and move it onto an exchange. And you don't necessarily need to sell it when it's on an exchange, but if it's held on account at an exchange, you have the ability to quickly sell it. And our sense is that the more flows that come onto an exchange away from people's wallets implies that people want to have more liquidity, because they're less confident about them holding Bitcoin for the long term, and they may want to sell it. Conversely, if people take money out of exchanges and are willing to put it in their private wallet, that means that they're very bullish. They're going to just buy and hold, and they're going to just keep it in their private wallets. So we track these net flows on exchanges. This is another metric we use. So this chart here shows you a chart for this year. And if the line is orange, that means there's outflows from exchanges, which means that people are becoming more confident in Bitcoin. So they're taking money off the exchanges, a liquid platform, to something illiquid, probably a private wallet or a custodian. If it's a blue line, that means there's flows coming onto an exchange, which means that people are getting a bit worried. So they want to have the money on exchange so they're able to sell it more easily. And you can see that during the May correction, there was a surge of flows onto exchanges, which to me implied that people were getting nervous. So they put their money onto exchanges with the possibility of selling it. However, more recently, especially since August, we see that this August rally, while we didn't see institutional flows, what we did see was that people were taking money off exchanges and into their wallets or some other illiquid form of holding their crypto. So kind of crypto or Bitcoin native type investors were basically saying, we're getting more confident. So these are kind of the early players. They were saying, actually, we're going to take it off. We don't mind holding it in liquid form. And that accompanied the rally that we've seen in crypto over the August period. More recently, the flows have been balanced. So this one is really giving you a neutral signal on Bitcoin. There's no real sense of, there's no real clear direction from there. Now, the third metric we look at is the activity using Bitcoin futures. So there's a number of different ways you can trade Bitcoin futures. There are crypto-specific exchanges that have futures like Binance, FTX, or Bybit. Then there's the more traditional exchanges like the CME, where you're able to trade futures as well. And what we like to look at here is rather than net positions, which I think are unclear in terms of what they mean. I like to look at what's called open interest, which is the sum of long and short contracts. So the higher the open interest is, that means the more exposure investors have in the Bitcoin market, which means that, in my view, there's more bullish sentiment towards Bitcoin. So on the crypto exchanges, you are seeing, at least since October, beginning of October, so this month, there's definitely been a big increase in open interest, which has gone from around 12 billion to around 20 billion over the course of this month so far. So that's giving you a bullish signal. Then on the CME, where we have a bit more longer sort of data, you see that open interest has been falling for much of this year. But since September, open interest has started to rise once again, which is a bullish signal. So activity in futures, so derivatives, is right now showing an increase in open interest. And that to us means there's more bullish sentiment towards Bitcoin. Now, for the next one or two sections, I'll hand it over to Dalvir, who can talk about HODLers. So over to you, Dalvir.
Oh, thanks, Bilal. Yeah, so the next section is about HODLers. So just a bit of context. HODL, the word is derived from a misspelling of the word hold, which was later kind of coined to mean, hold on for dear life, whether you buy into that or not. But the idea is that someone that HODLs Bitcoin or any of the cryptocurrencies alike these are sort of diehard, staunch adherents. So these are people that will hold on no matter what, and even in bearish markets, they won't liquidate their bitcoins, and they'll hold. Now, the reason we want to look at hodlers, we want to understand the age of the coins in the market and current circulation, and how this changes over time. So one of the metrics we look at is we split the vintage of the age. So, at any point in time, you can look at the circulating supply of Bitcoin or other coins, and you can ask, well, when were these coins last moved? And you can go, all the way from sort of 24 hours up to, 10 years plus. Now, what you'll find is that for the lower vintages, so like 24 hours, to the daily levels, to the monthly even, this is usually just the same liquid supply of coins that are just changing hands on a daily basis. So you don't see much fluctuations across over time in the amount of supply that's held by those vintages. So what we do is we look at 3 months on, and we split the vintages out. So we consider 3 months to 6 months as short-term hodlers. We look at 6 months to 1 month as medium-term hodlers, and then anything above 5 years we kind of consider as long-term hodlers. And then you can split these out further. So you've got really long-term hodlers here that have held onto Bitcoin for 10 years or more. Now, what we've seen recently is an increase in this blue line here. So the blue line is showing medium-term hodlers, and at the same time, we've seen a decrease in short-term hodlers, which is the orange line. The longer term hodlers, so the red, green, gray, and purple lines have moved sort of relatively sideways over the same period, although the 10-year line is slowly increasing. But the way we interpret this is as a bullish signal, as those short-term hodlers, the reason that they're decreasing is by virtue of the fact that the blue line is increasing. So we interpret that as the short-term hodlers are becoming medium-term hodlers, and are therefore more likely to hold on to their coins. And we view that as a bullish signal. And the opposite would be true if short-term hodlers were to sort of increase, or if we saw a decrease in the longer-term hodlers, as the long-term hodlers should have the strongest conviction, as they've held on for the longest. If we were to see degradations in those percentages, then that would be a bearish signal. So here you can kind of see that this purple line are people that have held, or the proportion of coins that are 10 years or longer. And you can see it's steadily been increasing since the beginning of January, and it's never really seen a period of decrease. So these are levels that we watch just to understand how the age dispersion of the coins changes throughout time. So if you scroll down a bit, Bilal. Thank you. So the next three metrics that we like to look at are more about profit and loss of investors in the market. So we look at two metrics that are concerned about unrealized profits, and then we look at another metric that's concerned with realized profits. So the first one I'll touch on is the percentage supply and profit. So this is simply just the percentage of all the circulating supply that's in profit. Now, as you'd expect with a rally, this will naturally increase. So, as we've seen since August here, we saw a big jump in the price. With that, the percentage supply and profit went up. Equally, we also look at the net unrealized profit and loss. So what this is looking at is the percentage. So whilst the PSIP is giving you a sort of proportion of the coin supply that's in profit, this is looking at the value. So it's a percentage of market cap. So, currently we're at around 0.61. That's telling us that the unrealized profit in the market at the moment is around 61% of market cap. Again, with up moves in the price, we would expect to see this increase, although we can see disparities between the profit, the amount of coins that are in profit, and the actual value of those coins, the actual value of those profits as well. So Bilal, if you scroll down a little bit more as well. And then the final one we look at on the P&L side of things is regarding realized profits. So this is the spent output profit ratio. So it's basically the difference. It's unrealized profits over the value at creation, or more simply, it's just the price sold divided by the price paid. And what we're looking at here is we're looking at how this value fluctuates around the one level. So naturally, again, as the markets go up and as the prices go up, a SOPA value increasing is telling us that people are realizing profits. and SOPR value that's decreasing or below 1 is telling us that investors are realizing losses. Now, the key level to watch here is 1. So typically what we've seen is that in bullish markets, as SOPR crosses the 1 level, generally that's provided historically a good time to buy. So buying the dips along 1. Again, the other side of the coin is that in bearish markets, you kind of fade the retest of the 1 level as the market goes down. But again, the way we interpret this is, again, if SOPR is going up, that's people are realizing profits, and that's a bullish signal. But equally, if prices are going up and SOPR is flattening out a bit, we can kind of view that and look into that as perhaps investors aren't actually realizing their profits yet. They're not actually selling their coins yet. And perhaps that's because they're actually anticipating further increases in the price. So that can also be viewed as a bullish signal as well. Over to you again, Bilal.
Great, thanks, Dalvir. And if people do have questions, do post your questions in either the Q&A sort of button that you have on Zoom or in the chat, and we'll try to answer as many of the questions as possible once we finish going through these charts. Now, the other metric we like to look at is mining activity. So in essence, the thing to monitor there is something called hash rate. So this yellow line here shows you the hash rate used by miners or produced by miners to effectively manage the Bitcoin network. So the higher the hash rate, it means that there's more computing power that's been devoted to maintaining the blockchain and the Bitcoin network, which is good. So it's more of a bullish signal. The lower the hash rate, that means there's less computing power allocated to Bitcoin, which is more on the bearish side. Now, as you would expect, the higher the Bitcoin price goes, typically that will attract more computing power as miners will come in. So there's a natural relationship between the two. But the good news is that, after the big correction in May, we saw the hash rate fall. The hash rate started to turn actually in July, before the rally in August. So from around July onwards, the hash rate started to pick up. So more computing power started to get allocated to maintaining the Bitcoin network. And that then later sort of led to a rally in Bitcoin. And now we're at fairly sort of, elevated levels in the hash rate. So that's kind of a positive signal. So we'd take this generally as a broadly positive signal that the hash rate's at a healthy level that should be able to support the system. Now, the other side, of course, is that we've heard so many stories about China banning miners, and so where are the miners now? And this chart here shows you the distribution of the hash rate. So where's which countries are providing the computing power to generate that to provide that. To provide the support for the system. Traditionally, so at the start of this year, China provided more than 50% of the hash rate for the global system in Bitcoin. And that sort of continued, started to fall steadily up until May. And then China started to crack down very heavily on miners. And now it's collapsed to almost zero. So almost zero, or there's almost no miners or hash rate is being provided from China right now. Instead, we've seen an increase from other parts of the world. So the US now has steadily, it was second place at the start of the year at much, much lower than China. China was above 50%, US was 10%. Now the US is steadily climbing, and the US is almost at 40% of the global hash rate. So the US has kind of taken over China now as the big provider of mining power. The other one to note is Kazakhstan. So there's always a country that is off people's radar, but Kazakhstan now is the second biggest provider of computing power for Bitcoin, providing just over 15% or so. And the good thing about all of this is that even though China has tried to clamp down on miners and Bitcoin, it didn't lead to the end of Bitcoin. If you look at this, other countries have taken over, and the hash rate is back at very healthy levels, similar to what we saw when China was very, very active. And this goes to tell you there's something quite robust about the Bitcoin and the crypto world, which kind of goes to the heart of the philosophy of crypto, which is that it's decentralized. And so that if it goes down in one place, you can recover it in another place because the blockchain is stored in multiple different places. And that's one of the powers of a decentralized system. So we take this as kind of a bullish sort of signal overall. So just to kind of summarize, if I just kind of scroll through all of them, we look at institutional demand. There's the Grayscale Trust, but we prefer to look at ETF flows, and that's giving you a bullish signal. Institutionals are coming in to buy Bitcoin. In terms of the liquidity demand for Bitcoin, it's fairly neutral. It's unclear in terms of flows onto exchanges. There's inflows and outflows are balanced, so it's unclear whether there's anything to tell us from that side. Futures activity, there's more and more engagement in futures markets, which we take as a bullish signal. HODLer dynamic, we think, is positive, especially as we see the 6 month to 1 year HODLers are increasing, which means that people who bought it 3-6 months ago, who have now become 6 month to 1 year vintage, are holding on to their Bitcoin. So the new entrants into the Bitcoin market are holding on. The P&L so far, it all looks fairly positive. People have profit; they're in the black, which is positive. And then the hash rate and the stability of the system seems quite positive overall as well. And before we go to questions, one thing I did want to sort of flag is we also have the same framework, but for Ethereum as well. So we look at institutional demand, we look at liquidity flows. For Ethereum, actually, the picture is very positive. There's there's just generally outflows from exchanges, so which means that people, when they buy it on an exchange, they just take it out and put it into a private wallet. Open interest is picking up. The HODLer stats are quite good. The P&L landscape is positive, and then the hash rates are looking very impressive, stronger even than Bitcoin. And also, the additional thing you have with Ethereum is that it's also used in the DeFi market as well. So there's this additional source of demand for DeFi. In general, we're more positive on Ethereum than we are on Bitcoin, though both of the metrics that we track are both giving fairly bullish signals on both markets. So with that, let me stop sharing the screen, and then we can start to go to some questions and answers. Dalvir, if you switch your camera on as well, I might need some help answering some of these questions. So there's a few people have asked questions about the Grayscale discount. What does that mean? With the Grayscale Trust trading at a discount, theoretically there is an arbitrage opportunity insofar as somebody, in theory, should be able to buy Grayscale and then sell Bitcoin. The problem is that it may be difficult for either Grayscale to issue new shares for people to be able to do this, or there might be some restrictions in people's ability to be able to arb this more efficiently. And so that's why we're seeing this persistent discount. That means that while theoretically there is an arb opportunity, there's certain institutional constraints for people to be arbed at. So that's why we prefer to look at ETF flows. So if people do want access to Bitcoin and they can't buy Bitcoin directly, you can just buy an ETF. There's a number of different ETFs that are on exchanges in Switzerland or Eurex in Europe or in Canada as well. There's a question on open interest, just how to interpret that. Open interest is the sum of long and short contracts. What you can do is you can look at the net long positions of different segments of the futures market. The problem there is that because all the positions will have to add up to zero, it's unclear which part of the market is the one you should focus on. We're doing more work on that, so hopefully at some point we'll have a clearer signal. Instead, I just like to keep it simple to say that the more activity, the more volume, you could say, the more outstanding contracts there are on the exchange, that means there's more interest in the crypto. In general, what we found is when Bitcoin's falling, open interest also falls. People just move away from that market. And then let me see any other questions. There's a question around Okay, there's some questions about the China mining and energy and so on. So the question is around the energy crisis. How could this affect the market? I think this is a big issue for crypto markets. So, as the cost of energy goes up, that will lead to higher costs to maintain the network, which should then, in theory, could potentially be reflected in the price. The price could go up. Alternatively, the other challenge here is that it could attract regulators as well. Now, what you are seeing is that there is the rise of these alternative cryptocurrencies, so Cardano or Solano, which are able to process transactions on the blockchain much more efficiently using less energy. Also, there's moves towards layer 1, layer 2 on top of Bitcoin protocol that could do a lot of the heavy lifting on transactions and then look back down to protocol and make changes back there. So there are some innovations in the crypto world that are trying to deal with the energy issue, but I think this will become a bit of a focus as well. There was a question around funding rates and staking opportunities. We'll kind of leave that out for now. Yeah, there's a question about, okay, if on the hash rate distribution, we showed a chart which showed that China's gone to 0 and the US share has gone up. But the question there is, because we're looking at a share of a pie, has the overall pie fallen as well? So China's out. Does that mean that the overall computing power that was available in total has gone down, even though the US share has gone up? My point there is that if the hash rate is still at a healthy level, then that tells you that there probably has been the overall pie hasn't shrunken massively. So there's enough improvement on the compute side to be able to offset that. So that's why we look at the hash rate as well as geographical breakdown as well. Okay, so there's some questions on. There's some sort of more technical questions on funding, which we'll kind of leave out for now, and staking. We'll probably have a separate piece of work around DeFi, staking, and farm yields and so on, for some of the presentation. Then there's a question around, do we expect a US-based ETF to be launched? Obviously, there's a lot of chatter around this all, and there's a lot of speculation that the recent rise in Bitcoin may be due to an anticipation that there will be an approval of the US-based ETF. I think it's inevitable. It will happen. It's just a question of timing. And so I do think it will happen. Whether it will happen in the next few weeks, I don't know, but it's inevitable. I mean, Canada has it, Europe has it. It's just the direction we'll be going in. Okay, I think that's. I think we've addressed most of the questions already. Hopefully we can address some of the other questions sort of separately, or people can email me or message me directly if they prefer, and I can hopefully answer the additional questions. And the other thing to say is, like, we're just recently applying all of our research skills on the crypto markets, and so if people have ideas of factors we should look at, metrics we should look at, then just ping us and we'll try to incorporate that into this framework. I mean, it's such a new market, all of this. There's lots of things are changing all the time. So this is really an exciting area, and we're always looking to improve the approach that we're taking. So with that, I just wanted to thank everyone for attending this webinar. Hopefully people have found it educational and useful. All the charts we had are on the MacroHive website. So just go to macrohive.com and you'll be able to see the articles. If you're not a member, you can just sign up and become a free member with a free trial, and then you can access everything. So it's really quite good value. So just wanted to thank Dalvir for helping me on this presentation. And with that, thank you all very much, and good luck investing in crypto markets.